Hello and welcome back to The Note. Let's start the week with a conversation about one of the greatest investment phenomena of this or any other age, Warren Buffett. It's impossible to overstate how successful he's been, but is the great man, now over 80, finally reaching the point where he might start paying dividends to his investors? He's never needed to do so before. With me now to discuss this is a blogger for FT Alphaville and a former colleague from the Lex column, Dan McCrum.
Hi, John.
Hi, Dan. Let's start with a very dramatic chart. It's very difficult to get one's arms around exactly how successful Warren Buffett has been. Strictly speaking, this should be on a logarithmic scale, but it's just rams home the point. That horizontal blue line there is the S&P 500 since 1976, and if you want to fit Berkshire Hathaway's share price onto the same chart, that is what it looks like, a horizontal line. How can we, first of all, account for this extraordinary performance by Berkshire?
Well, what you have here is the prime example of what Warren Buffett holds dear, compounding.
Right.
If you keep reinvesting money and never pay it out, then over time it will snowball, it will build up and will build up. And he's always found new things to invest it in. And he actually did pay a dividend once, right at the beginning of his investment partnership, and has always regretted the billions that those few $1,000s would now be worth had he not done so. But what you see here is if you keep on finding bigger and better things to buy, then the money just adds up and adds up.
Now, that's interesting. If we now take a look, however, at operating profits, i.e. the money that's being made by the companies he owns directly as opposed to profits within the investment portfolio, you can see that something really quite dramatic has happened in the last decade. How do you account for this dramatic increase in operating profits?
Well, what happened was Mr. Buffett actually made a bit of a change in his strategy. In the 90s, he started buying bigger companies, and that really accelerated in the 2000s, reaching its peak with Burlington Northern Santa Fe, the railroad company he completed buying in 2010. And what he started adding was big companies that on their own would be Fortune 500 companies. And you can really see the impact on that in the profits that flow through to Berkshire. And this is, again, the effect you get with exponential growth. Gravity starts to set in and you become bigger and bigger. And so the incredible thing is, in the last 5 years, in terms of profit, Berkshire has generated 40% of all the profits it has ever made.
Is that true?
So Berkshire is sort of on course to sort of double in terms of profitability in just these recent years, everything that he achieved in the 40 years before. But of course that then presents a problem. You become too big.
Right, exactly. And to some extent, part of this is because there's no longer any point when you're this big trying to take large but non-controlling stakes in companies. It just won't move the needle on the overall performance of Berkshire. He has to start taking control, as I understand it.
And when you're a very patient investor like Mr. Buffett with very strict criteria, it also becomes very hard to buy things cheaply.
Right.
For instance, he bought Heinz last year, and that was quite an unusual deal. But it's very difficult for him to unload his elephant gun, as he says.
Now, in terms of the elephant gun, let's have a look at his ammunition. This is the Berkshire cash pile, and obviously the same thing has happened over the last decade as we saw with profits. It's moved up to a completely different level. Do we now reach the point where he has to admit to his investors, I really can't find a useful use for this, I'd better let you have some?
Well, he's going to have to write a mea culpa to his investors this year. The letter will come out in March. And Mr. Buffett judges himself. He says investors should measure this yardstick. Can he grow Berkshire Hathaway faster than the S&P 500 over a 5-year rolling basis? He has done this
in terms of his net asset value.
In terms of the book value of Berkshire Hathaway.
Yeah.
And it's an understated value for the business, but it's the proxy he uses. And for 43 times in a row, he has beaten it on a 5-year basis. But because we've had this enormous stock market rally since the Great Recession, he is now going to miss that. Which begs the question, here he has so much cash and he's struggling to invest it. He's no longer able to beat the market. There was this question, perhaps it's time that he pays out a dividend, admits defeat.
So at even odds, for your final question, Dan, would you bet on his actually paying a dividend this year, or do we need to wait longer for that to happen?
I'm going to bet no. One reason is that he has said in times of big bull markets, Berkshire will underperform. And if you are like Mr. Buffett, you will probably want to see if this bull market is going to turn nasty and perhaps some more opportunities present themselves as the unwinding of quantitative easing, or if there's some dislocation.
Right.
That's a lot of money to have on one hand. And the other reason is, I think there's one last roll of the dice which Mr. Buffett could try. He made this deal with Heinz last year, and for the first time he bought in another party, 3G Partners, who have actually improved the business. That's not something that Buffett did before, and perhaps he could now find some other businesses to do this with again.
Okay, thanks, Dan. So Warren Buffett could become a management consultant effectively in his 80s. It's very hard to disagree with that analysis. I suspect that it will take a few more years before Warren Buffett finally concedes and pays a dividend. And of course, in the contrarian world of Warren Buffett, if the market really does take a bad tumble in the next year or two, there will be lots of lovely opportunities for him.